Hello, and welcome to the Wallfacer Labs State of the RWA Market Q3 2023 recap. This is now the second instance of this presentation that our team is putting together. The last one that we did was a Q2 recap, and if people enjoy this, it's something that we'd be happy to keep doing into future quarters. So as a quick bit of an introduction, Wallfacer Labs is a crypto research and development company. Today, we contribute to TrueFi, an on-chain credit protocol. We've built a data platform called vaults.fyi, whose data we'll show later on in the presentation. And we also maintain some open source frameworks like UseDApp and Waffle. Quick disclaimer, the information contained in this presentation is provided for informational purposes only and should not be construed as legal or financial advice on any subject matter. And this presentation is definitely editorialized and opinionated. I, Ryan, am choosing what to include, and I try to cover things that I find meaningful trends and ignore one-off data points. So we'll kick off today by looking at the growth within the T-bill sector, take a quick look at private credit using Centrifuge as a proxy for the space, dig into some other trends and noteworthy launches, and then I'll provide some commentary on how the market seems to be thinking about this space as well. So let's kick off with T-bills. So there really are two great data sources today you can use to analyze T-bill growth. One is RWA.xyz, whose data I'm using here, and the other one is Steakhouse Financial, which we'll look at next. So looking at the RWA.xyz data, we can see the biggest grower in Q3 was Backed Finance's T-bill product, with TrueFi and Mountain Protocol both bringing T-bill products to market as well. Now, if you dig into this a little bit, you'll see that the growth from Q2 to Q3 is about 20%, so 18.18, whereas growth in the prior quarter was closer to 40%. A lot of that, I think, was just kind of new launches, and Ondo really had the majority of their growth in Q2, and so that's where we're seeing a lot of that come from. Now, the one thing with RWA.xyz data that I tend to discount is the Franklin Templeton Benji product. So you can see that far and away, that's the largest product on this chart. And I'm always a bit confused about how to think about this product personally, because to me, it's not exactly an on-chain product in the way that the other ones are. With the exception of maybe Wisdom Tree, which is small enough that I'll include it. You can get access to these larger products here, OpenEden, Mountain, TrueFi, Maple, Matrixport, all on-chain. Whereas in the case of Franklin Templeton's Benji product, I'm more under the impression that they are sort of having some kind of on-chain marker or representation of them holding these assets off-chain, right? So I don't think they're actually holding stable coins to use to buy these. So it's hard for me to understand exactly how this is an on-chain product. So if you actually strip out that data from the Benji product, as Steakhouse Financial does, you'll see that the growth for the quarter actually looks a bit larger. So looking at the Steakhouse data, which roughly is the same as RWA.xyz, I think there's some small discrepancies, but directionally very much the same, except it excludes the Franklin Templeton product. You'll see that actually growth for this quarter was 33%, and the prior quarter was 99%. So again, very promising. I think if the T-bill space can keep this up, that will continue to see sustained growth in the space. I think one of the interesting things looking at these is that, this growth is spread out across at least 10 offerings. So even though these things are relatively commoditized and that we're all offering kind of similar T-bill exposure, and that's a whole conversation for another day, this growth is kind of spread out across 10 of these entrants. So interesting in that respect. And just, again, looking at some more data from RWA.xyz, you can see that, again, if you strip out the Franklin Templeton product, which is this stellar chunk here, again, most of these things are ETH denominated. There are examples now of people starting to go cross-chain and do other instances like that, but right now still very ETH-heavy offerings. So moving ahead to private credit, I'm going to basically use Centrifuge as a proxy for private credit across crypto. There certainly are other platforms that have private credit deals, including Goldfinch and Credix, but in terms of overall size, activity, and mindshare, Centrifuge is the leader here, so I think it's okay to use them as a proxy. So the data here comes from this Dune dashboard linked at the bottom. I think it's a very comprehensive dashboard looking at Centrifuge. And what I'm doing here is just taking all outstanding loan data at the end of each quarter and comparing that across. So you can see here I have January 2023, July 1st, 2023, and then October 14th, 2023. And when you dig into this in the last column here, just kind of looking at the quarter over quarter change. So this column here is looking at the July 1st to August 14th change. You can see that most of these deals are flat from the prior quarter. And the only things that we really are showing growth in across Centrifuge are the deals that are funded by MakerDAO. So in this case, that's New Silver and Block Tower Capital's auto financing type of deals. And when you strip out Block Tower, and obviously I think that's sort of unfair because that really is the most exciting deal across the entire space. So I don't want to strip that out completely, but I think at least to get a different picture of what kind of growth looks like across private credit, I think when you strip out Block Tower, the quarter over quarter change that you see on Centrifuge is sort of mirroring what you're seeing at other places across the space. So, it's possible that some of this growth in Centrifuge could change in the coming weeks as months. They're about to launch a T-bill product of their own, and so we might see some growth flow in there. But broadly speaking, I think, private credit across crypto is a very challenged space. I think the interest levels are relatively low across, any type of investor looking for private credit exposure. And so I don't expect to see a ton of growth across these deals, broadly speaking, across Centrifuge or any platform for that matter. So now let's jump into some other trends to watch. So in my last presentation, I went much deeper on explaining how some of these platforms actually work. And so if you're not familiar, I think it's worth going back and watching the beginning of that last presentation. However, broadly speaking, there are two underwriting models that these platforms utilize. And you could sum that up as, do they use entirely external managers, or is the majority of credit underwriting done in-house? And as of 3 or 4 months ago, most of the underwriting was happening with external managers. Now, the trend that I think we're starting to see over the last 2 quarters is the core team members of these different platforms beginning to build asset managers within their respective labs organizations, right? So the same organizations that are responsible for development of the protocols. Last quarter, Maple announced Maple Direct, which will have their core team beginning to underwrite loans to crypto market makers and other kind of crypto native verticals as well. And just recently, on October 26th, we saw that, I guess technically that's a Q4 deal, but I'll include it in here anyway, I guess, since I'm making this presentation a bit late. But Goldfinch announced that their core team, Warbler Labs, would also be building some credit underwriting functionality in-house. Specifically, what they say, this kind of revitalization program for Goldfinch is that Warbler Labs is beginning to build its own successful lending business, a robo-advisor for private credit on top of the Goldfinch protocol. In doing so, Warbler Labs will be an early example of how to build on the Goldfinch operating system for lending, which will lead to blah, 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 blah. And I think this whole kind of revitalization plan from Goldfinch is definitely worth reading. It's very interesting. And I guess my thoughts on this model is that there's certainly nothing inherently wrong with doing this. To the extent that I think the place where you can have challenge is that to the extent that you then begin competing with other asset managers that are also trying to do deals on your platform, that's where I think things get a bit murky. So I think at least in the case of Goldfinch, their community seems to be very supportive of this idea. I think it is viewed as being the revitalization that the Goldfinch platform needs. And so I personally find at least the Goldfinch one to be very exciting and is definitely something I will continue to be tracking. Some other interesting trends this quarter, just going to kind of cover some noteworthy governance proposals. I won't summarize these too much. I suggest you go and read these yourselves if you find them interesting. But on the left is Backed Finance recently proposing their T-bill product to be included as collateral on Compound Finance. At least at this moment, it doesn't seem as if this is going to go through, just because to be included as collateral there, Compound would need very high liquidity for these assets in case they need to liquidate them. I think that was one of the big holdups at the moment for why they probably wouldn't move forward with this. At the very least, though, I think this is interesting because Bakkt, shares a bit more information and stuff about the transferability of the asset, and overall it's a well-written post, so it's worth reading. Then on the right side, we have a proposal here actually on the Stargate governance forums from Mantle and Ondo, where Mantle recently has kind of announced that Ondo's USDY product will be the default RWA-backed stablecoin on their layer 2. And this proposal on Stargate's forums on the right here actually shares a bit more information about how that's going to work. The key thing to highlight here is that Mantle will be creating a rebasing form of Ondo's USDY stablecoin on their chain called MUSD. And so with that, Mantle is basically saying that Ondo's USDY in the form of MUSD is going to be the default type of stablecoin on their chain. So this is very interesting. I think it's the first instance of really seeing something like this on a layer 2. And again, as a trend to watch, I think is quite interesting. So worth reading this thing in whole and paying attention there. Last one, I don't want to go too much or read too much into this, but just recently the Credix team announced that they would be pulling out of their engagement with MakerDAO to try and get some of the, to try and basically get MakerDAO to lend to some of their RWA deals. Again, I don't think it's worth reading too much into this, but I think it's just a challenge of, trying to do some of these larger deals with MakerDAO, one. And two, I think is also maybe a bit of a broader trend of what we're seeing across MakerDAO here. So on the bottom here, I highlight Steakhouse Financial's RWA report on MakerDAO forums. It's something that they do, I think, every month or every quarter. I forget actually. Excuse me. And they highlight and walk through some of their RWA deals. I think what you can see across these is that they're starting to pull out of several of the deals. So HVB, the big kind of bank lending deal, is winding down. Two of the centrifuge deals, I think Consul Freight and Harbor Trade, those have some loans in default, and so they're winding those down as well, while at the same time MakerDAO is greatly increasing its T-bill exposure. So I think that that's kind of the direction they're going through. Other things worth kind of highlighting this past quarter are some fundraising and new launches. On the left, we have a giant fundraising announcement for Untangled Finance. I highlight this one because Untangled Finance seems to be in the private credit space, and so raising $13.5 million in equity capital to bring private credit on chain was a bit surprising to me, just given, as I've kind of highlighted earlier, the general muted lender interest in some of these deals. So to see such a large equity financing was surprising. And then on the right side, the other deal I think worth highlighting from this past quarter is Mountain Protocol, which is now live as well. I've mentioned them twice in this presentation as well. The thing that I find quite interesting about Mountain is that they have a novel regulatory structure through this license in Bermuda that they claim allows them to have their asset, generally speaking, be fully permissionless and tradable on chain. So you still need to go through all the same KYC and stuff to mint and redeem the asset. You're not allowed to be a US user to mint and redeem the asset. But after that, the asset seems to be freely tradable on chain, just like a USDC or Tether would be. So very interesting to me, and we'll see how this one continues to play out because that is a very interesting form factor for these T-bill products. Moving along. So, I am definitely an infovore, in consuming a lot of content, both on Twitter and podcasts and stuff, and, a lot of RWA related things as well. And I think something that seems clear to me today is that when the people in the market talk about how to get exposure to RWA, it doesn't seem as if they're talking about the platforms, right? They're not talking about, so sometimes they are, but not so often are they talking about TrueFi or Maple or Centrifuge or Goldfinch. They tend to be talking about MakerDAO, Frax, and Canto. So just some random examples here that I pulled from Twitter, but you can see just, in the past week or two here that when people think about RWA, they tend to be thinking about the lenders, or they tend to be thinking about the people who are investing in these assets, not necessarily the platforms that are originating these assets. So just taking a look here, and by the way, this data comes from vaults.fyi. This is also a product built by our team at Wallfacer Labs. But you can see that one of the biggest ways that people are getting exposure to T-bills today is through MakerDAO's SDAI product. Now, what is SDAI? SDAI is a tokenized wrapper around MakerDAO's DSR, DAI savings rate. And if you rewind the clock back a year or so, or maybe even a year and a half at this point, the DSR was a very nominally low rate, like, 0.2% or something like that. However, in the past, I guess, let's see, just looking at the data here on vaults.fyi, you can see it seems like this really picked up sometime in July, I guess. So I guess like 6 months ago or so. The DAI savings rate shot up to 8% about 8%, and recently has settled at about 5%. And what they're basically doing here at MakerDAO is taking the exposure taking the yield that they're earning on T-bills from places like Block Tower and Monetalis, and basically passing that along to DAI holders. So on the left here, we have SDAI, which exists on ETH-L1. And then on the right here, we have this thing called Savings XDAI. The Vaults FYI Twitter account had a good thread on this, but basically Gnosis Chain uses DAI as their native currency. And so they have invested the DAI that sits in the Gnosis Chain bridge into Spark Protocol on ETH-L1, earning the DSR rate. And then for users that then stake Savings XDAI on Gnosis Chain, they get a boosted yield essentially. That was a tough explanation to make verbally, but I promise the thread that I wrote on the Vaults account is much better. So worth checking this out. But at least for today, this is one of the most prevalent ways that people are getting some kind of T-bill exposure. And I think this is also why the market is so heavily associating MakerDAO with RWAs. This is just a little bit more detail on MakerDAO's RWA deals. You can see on the right here, this data from MakerBurn that right now MakerDAO has got about $2.6 billion worth of T-bill exposure through Block Tower Andromeda and Monetalis Clydesdale. The debt ceiling on both of these, I believe, has recently been raised to $3 billion. And so I suppose as more money flows into the DSR, we'll start to see more T-bill investment from MakerDAO as well, which is very interesting. On the left here, This data is something I had made, I think, in my prior presentation, and I want to call that out again because I believe I am wrong in that Monetalis and Block Tower, I thought were earning rates actually below what T-bills were paying, but looking at the recent Steakhouse report, it seems as if these are paying market rates. So I think today Block Tower Andromeda is not paying 4.5, they're actually paying 5.1. So what that means is that as Maker is paying out 5% to DSR holders, Maker is still clipping just a small amount for themselves, and that 0.1% difference there. So I previously had thought that Maker was actually taking a slight loss on these deals. I was wrong. They're actually earning closer to market rates. And then this vote at the bottom here is actually to increase the debt ceilings for these other deals. So moving on, Frax, not to be left out of this narrative, has also introduced SFrax. Kind of their take on SDAI. Now, my understanding of how SFrax works is this image on the left. I actually forget if this image comes from Frax's docs or if it comes from the ASXN research account. But either way, this is my understanding of how SFrax works, which Frax recently set up a kind of a related entity called FinRes PBC, which has a relationship with a community bank in the US to give them T-bill exposure. And so my understanding is that when you stake SFrax, Frax is then making a decision on the back end to either put your money with FinRes PBC, which is investing in T-bills and receiving yield, as the image up top here basically shows, or if T-bill yields decreased, for example, and or Frax AMO yields were better, Frax would rebalance those funds into some of their AMOs to make sure that you are earning a competitive yield. Their target here is the Federal Reserve IORB rate, which I think today is about 5.1%. So if you're an SFrax, that's what they're targeting. They're targeting that you should be earning at least that rate or more. And so this is, again, a very kind of novel and interesting product. Again, data on the right here comes from Vault's FYI. You can see today there is about 188 holders for this product, 45 million in TVL, at least when I did this screenshot a few days ago, and a base yield of 6.36%. So again, if you want more data like this, check out Vault's FYI, and we can always add more vaults as well. The last thing here I think worth covering is Canto. Canto, I guess they're a layer 1 built on Cosmos, but I think they're actually moving to be a Polygon ZK EVM or something. But Canto is also trying to lean very heavily into the RWA narratives. I think today they have about $11 million worth of T-bill product from Hashnode, I always forget, currently deposited into their lending market, in which people are able to mint note against that. And they definitely want to increase this as well to capitalize on all of the growth and interest in RWAs. So I think you also see Canto being a place where people are using as kind of a proxy to get some RWA exposure in the market. One of the last things here, and I won't highlight this for too long just because it's kind of brand new, but as I showed, for example, so our data here from Vaults.FYI, one of the metrics that we've been trying to capture is this number of holders and trying to build some new kind of analytics and stuff around this. We're also starting to do the same for RWA vaults, and hopefully in the future instance of this presentation, we will be able to give much more of a deep dive into how many individual users are actually on these platforms and taking advantage of them. So that's all that I have for today. If you enjoyed this, please subscribe to our YouTube. Please send me a note. Just, I could definitely use the validation just to know that people find this interesting, and, if it's something that people want us to cover in the future. Also, if there's other protocols or metrics you want me to cover, definitely let me know and I'd be happy to do that. Just again, as a short plug, you can find more research that we do on various topics, so not just RWAs, at our Substack, so wallfacerlabs.substack.com. And you can also find our new podcast, Wallfacer Labs, on Spotify, Apple, and shortly coming to YouTube as well. So please do subscribe and keep a lookout for work that we do in the future. Thank you so much for tuning in, and talk to you soon.